Hello, I'm Russell with Community Financials. Our business helps make self-managing HOAs and condos easier by providing monthly accounting and administrative help nationwide. To further help community boards, we're starting a video series called Ask an Expert. In this series, we will pick industry experts and have them share with us some insights to help you run your community. A confusing topic to many board members are reserves for capital improvements and reserve studies. To help simplify this topic, I've invited Robert Nordlund to have a conversation with us. Robert is a registered professional engineer and has been involved in the community association industry since 1982. He founded Association Reserves in 1986 and has pioneered many widely used reserve funding concepts. For his expertise, he's earned the Community Association Institute's Reserve Specialist designation and has the distinction of being Reserve Specialist number 5. Robert was involved in creating the 1998 National Reserve Study Standards and has continued to greatly influence the reserve study industry. He's a past chairman of CAI's Reserve Professionals Committee and past chairman of the Association of Professional Reserve Analysts and past president of the CAI Greater Los Angeles chapter. And thank you, Robert, for agreeing to talk with our audience today.
It's a pleasure to be here, Russell.
So let's get to it. Why are reserves important, and why is it important for associations to be concerned about reserves, interested in reserves, and let's start off there.
Well, thank you. Basically, I see an association having two budgets. It has the operating budget with which they pay the daily, weekly, monthly bills. Those are pretty easy to get on top of. You know the management bill, the power bill, the water bill, things like that. But reserve expenses are the largest expenses an association will face. And so fundamentally, the reserve fund is there to help the association prepare for those big bills. Basically, it allows the board to care for the physical assets of the association. Basically, that maintains property values, and it allows the board to demonstrate that they are doing their job, and that's caring for the assets of the corporation.
Great. And is it, what do you want to, are there, what happens to an association when they don't have properly funded reserves?
When they don't have reserves, basically, you end up just running out of money. It's pretty simple. We talk about that saying that there's disappointment, there's discouragement, there's deterioration. We call them the D's, but an association fundamentally runs out of money and they can't pay they don't have the money to do the roof project on time, so they end up doing some patchwork, which ends up making the project even more expensive, but they run into special assessments, they run into deferred maintenance that depresses property values, it causes tension at the association. So just generally bad things going on when you don't have the funds to do the projects you need to do on a timely basis.
I've seen this so many times with community boards. I think that these projects are very challenging for them because it's not something they're used to doing. And the numbers can be so large that it makes them a little anxious. And so I've seen, operating expenses for maintenance be, 2 or 3 times what they should be because they're just dealing with, say we're going back to that roof example, a roof leak and just patching, and then you've got to deal with interior water damage and you're upsetting the owners, but you're blowing a hole in your budget. And, if they had just bitten the bullet to do a proper re-roof, they would have saved all that money in the 2 or 3 times the regular, maintenance line item and been able to just put that towards, the reserve funding or a loan for the reserve. So, it's, I really hope that the audience gets a lot out of this today.
That's accurate, Russell. Typically deferred. Oh, I'm sorry. Go ahead.
If you don't have a properly funded reserve, you're going to have to either do a special assessment, or you're going to have to go out and get financing from a bank, and that'll be a 7 to 10 year special assessment. And if you have a small reserve and you have sort of an older aging infrastructure, you're going to have depressed property values. So you're going to by not having, that's why this is so important. One of the main, responsibilities of the board is to have fiduciary responsibility to the community, and that means protecting the assets of the community. And if you don't have a reserve funded, you're really you're diminishing the asset values or the home values.
Correct. You stated it very clearly. Without sufficient reserves to do the projects on a timely basis, you end up as a board just making things more expensive for the owners, more difficult for the owners. You depress property values. There's no gain to scrimping on reserves. It's not like you're paying money to outside people that it's money that's gone. When you put money into the reserve fund, it's there, and it changes from dollars in the bank to a new roof or paint on the exterior or asphalt or new carpet. It's money that the association spends on itself, and that's a tremendous investment in maintaining property values. It's just the board's fundamental job to do exactly that.
Yeah, and when there's a new home buyer, part of our service, we do resales, and the resales ask how much money are in the reserves. In many cases, it asks that question. And if you have a low reserve balance and the property has some of this deferred maintenance, it's going to cause could cause a red flag for a buyer, and that can squirrel a deal. So you don't want to do that.
Yeah. If I can inject something here, the amount of cash that an association should have varies tremendously. Obviously, for larger associations, they should have more cash. Generally, older associations should have more cash, but just there's a timing factor also. An older association that's preparing for a roof project should have a lot of cash on hand. An older association that just accomplished the roof project doesn't need that much cash. They spent it. It was done in a timely manner. So there's this factor called percent funded that allows an association to measure the amount of reserves they have on hand compared to deterioration. So that may be a much more valuable number to look for than how much cash does the association have. That allows someone to say they are well funded or not well funded just by their looking at their reserves percent funded.
Yes, and I've gotten asked over the years so many times by boards, well, what's a rule of thumb for, what should we have in our reserves? And, there is no rule of thumb, that's the bottom line. The bottom line is everybody's situation is different. Some communities are small, some are large, some were built in the 70s and 80s, and they're at the end of the useful life for the major components, and they need to be rebuilt in ways. And then some are new communities. So, it's what you're saying is it needs to be based on the individual community and based on where they are with their projects and their timeline, the lifespan of their the capital items.
Right. Is there a particular asset blend? Do they have carpeted hallways? Do they have elevators? Do they have wood siding? Do they have wood decking? There's some of these things that are very expensive. Asphalt driveways, concrete, so many different variables that make it very difficult for an association to compare one to another as far as how much reserves are good to have. And then there's that timing factor that I just mentioned. Are you preparing for a large project, or did you just finish a large project? So that's why you need to look carefully at, is the association well prepared for its own expenses?
Right. Now, some communities, think that they're smaller, so they don't need to have a reserve study. And I think that is, faulty thinking, or, just being, just thinking that it's just for large communities. Can you talk about that a little bit?
Yes, my sister, her first home purchase was a condo in a 4-unit association, and they have the same issues that large associations have. It may be a little more informal. Who's going to be the treasurer this year? Who's going to sign the checks? Those kinds of things. But the roof deteriorates on a 4-unit condo just as it deteriorates on a 400-unit condo. So the assets are there. They're going to deteriorate. And you need to be prepared financially because, again, those reserve expenses are the largest expenses the association will face. At a small association, that little 4-unit condominium association, when you need to replace the roof, maybe you only pay for 1/4 of it, but you still need to pay for your fair share of the roof, just as you would in a 400-unit association.
Yeah, it can be a big expense.
They are large expenses, yes.
Yeah. So, even you out there, audiences who have 4 to 50-unit complexes, and you think that you don't need a reserve study, you still should have a reserve study. And what I used to say is maybe you don't need one as frequently because your budget might not allow it, but you should at least have one on some sort of frequency. So let's talk about that, Robert. Is that something that could make it more affordable for a smaller association to get a reserve study by doing it maybe getting one done and then revisiting it a couple of years later, more so than a longer time period to revisit it than a larger community might want to?
Certainly, there's a number of factors at play. I guess one is that there's 3 different types of reserve studies. There's a full reserve study that is created from scratch. Mm-hmm. Most associations only need to ever do one of those once. Then after that, you do one of the 2 different update versions, an update with site visit or an update no site visit. And those are significantly less expensive than that initial full reserve study. Okay. Now, for the average association, then they do one full reserve study to get all the information together, find out how many square feet of roof or how many squares of roof they have, square feet of asphalt, yards of carpet, number of boilers, all those kinds of things. That's a bigger deal. And after that, it's just a matter of tuning it, adjusting it and updating it. So what we find is that, and you talked about, are there any figures of merit? There's no real figures of merit as far as how much an association should have in the reserve fund, but we find very interestingly that a good figure of merit is that an association needs to be setting aside anywhere from 15 to 40% of its budget towards reserves. The more complicated associations tend to have larger budgets. The simpler associations, just a homeowners association, maybe with just a tot lot, they have smaller budgets, but still that 15 to 40% of the budget going towards reserves tends to be a pretty stable number. Of course, there's a large difference between your association being the 15% and your association being the 30 or the 40 plus percent. Yeah. But an association needs to be setting that amount aside. So given that, that's still a significant portion of the budget. So you don't want to let that go unaddressed without updated for very long. We find in our practice that when we update an association's reserve study every year, it's just a minor tweak. We find that when we update an association's reserve study every 3rd year, which is another frequent point, mm-hmm. that is something that we call just a normal adjustment. But when they wait 5 years or longer for someone to revisit their reserve analysis, then we typically call that a rescue. And what that involves is often a special assessment, a significant increase in the reserve contributions, a lot of pain and anguish that could have been minimized by just tweaking and adjusting along the way. Basically, there's so many assumptions in a reserve study that you don't want to let the assumptions get cold. So keeping your eye on the ball and focusing on it, doing those less expensive updates every few years is really in the best interest of the association. Deterioration changes, the reserve balance changes.
Projects that were done to update it so that
right.
Up to speed. So the association's going to pay a one-time fee for this reserve study, and then maybe they're smaller and they'll do a update every 3 years, and then if they're larger, maybe they have a lot of projects happening, maybe they want to look at that every year or so.
Yeah, there's an update no site visit that's very inexpensive, but an update update with site visit every 3rd year is a very reasonable pattern.
Okay, great. I think the other thing that is just unfair about reserves is the association that doesn't put away money for reserves for the first 10 or 15 years, the association, those owners are not contributing. And then when they sell, a new owner comes on board, and then all the new owners have to pay for the deterioration of the property. So it's, everybody's not paying their fair share into the association's account, but you've got this, this liability that's being taken on by basically newer owners. So, would you talk about that a little bit?
Certainly. Just like you say, it's an unfunded liability. The assets are deteriorating every day, whether the board appreciates it or not. The roof deteriorates every month. And just because the roof doesn't send a bill to the association doesn't mean that that bill doesn't need to be paid. The association needs to pay the water bill, the power bill, management, insurance, all those things on an ongoing basis. And the assets around the association all deteriorate on an ongoing basis. And so it's incumbent upon the board to, or actually it's their responsibility to care for the assets of the association, basically offsetting that deterioration on an ongoing basis with appropriately sized reserve contributions. Otherwise, you get behind, and there's this big balloon payment concept here in our industry that they call special assessments. And that's unwelcome, that's divisive politically. It's a bad thing. But yeah, if there's nothing gained by under reserving, the association just gets behind financially, puts the board's ability to execute projects in a timely manner at risk, and it raises the chance that they'll need special assessments, and those people paying the special assessments are often the people that did not enjoy all those years of service of those assets.
Right. The other thing about the special assessments and coming up with, well, we don't want to increase our budget and common charges to pay for reserves. I've written a couple of articles. We're at the longest business expansion in U.S. history right now. So that means we've been in a good economy, a fairly good economy, and a growing economy. And, that's going to come to an end. And, the board that has to deal with a capital improvement project or a big special assessment to cover them, or, starting to build reserves during a recession, it's going to be much more difficult. And I would highly encourage viewers to, if they're on a board, to really take a look at getting ahead of the next economic cycle downturn. And if you need to start putting away reserves, start pitching that now, because it's, as there's more news stories about recession, whenever that occurs, it's not going to be friendly, unit owners that say, oh yeah, that makes sense. Please, increase my charges.
Absolutely. I'm with you on that.
Yeah.
When the delinquencies start to creep up, that's a harder and harder time to start setting aside more towards reserves.
I want to talk about, this is so important that many states have made it a requirement that the associations, have a reserve study done so that the owners aren't caught by surprise and that it's fair, like we've talked about so far. And I know that can you talk about a couple of states where that is, a legal requirement?
Certainly. There's a number of states across the country that address reserves. I think it's 24 states. Legislation has to do either with the budget preparation process or the disclosure to incoming buyers. California, Florida, Washington, Hawaii, Nevada, Delaware, those are just a few that come to mind. Hawaii and Delaware, I believe, have actual funding requirements, stipulations how much needs to be set aside. Washington's reserve study law was built on, it has elements, when you look at it, you can see a little bit of California, a little bit of Florida law, but California and Florida law are built on the budget preparation process, whereas the Washington law appears to be built more on the disclosure to new buyers process. So it's interesting how these elements come together, but the fundamental is the board's responsible to maintain the assets of the corporation, and To do that, they need the cash flow. They need to be setting aside the right amount of funds on an ongoing basis. So whether it's for the annual budget disclosures or whether it's for disclosures that will go to incoming buyers, they need to demonstrate that they are on track and they're just doing their job.
Right. So, I hope people get the sense that even if it's not required in their state statutes, those other half of the states that don't have those requirements, that it is still, if you consider half of the states have this requirement, it's probably because it's a best practice and fair to homeowners and fair, better for boards. So it should be adopted, no matter if your state has it or not.
Yeah, I wear a seatbelt because it's the right thing to do. I don't wear a seatbelt because I'm afraid that a policeman or a highway patrolman will pull me over. Yeah. You do it because it's the right thing to do.
All right. If a community wants to get started with a reserve study, how does that, is there a ballpark of what a reserve study would cost? I know probably smaller associations, it's less of a cost. Larger associations, it's more of a cost because they have more complex, physical structures and amenities. So can you talk a little bit about that?
Yeah, typically a reserve study is priced based on the complexity of the job. If it's a condo versus a HOA, condos will have fundamentally more assets because the association is responsible for the residential structures. And then there's obviously size. There's a little bit of a time of year factor because most associations have a December 31st fiscal year end. So in the budget preparation business, which is what we support, we're busy in the summer and fall. Mm-hmm. But basically it kind of boils down to that a full reserve study, that initial create from scratch reserve study, often is in the range of about 1% of an association's budget. And then the updates end up being significantly less, half-ish of that first full reserve study.
Great. Well, thanks for providing that to the viewers. And we're going to put a link down below to Robert's company so you can see, where what his business is all about and how to get a quote if you want one. Now,
thank you very much.
Yeah, and you had mentioned that there's an online tool that you offered for an association to try and, if they want to take a look at this themselves to get started before engaging a professional reserve company like yours. So can you talk about that a little bit?
Certainly. We are strong advocates that an association needs to be doing their responsible reserve planning. We created an online tool, we call it PlanIt, that we rolled out to our clients this year, and it was very well received. So when we finish the reserve study, we post the information online, and they have this PlanIt tool that allows them to tweak some of their numbers, change some costs or life expectancies with their components, change their starting balance, change their funding plan. It's a very nice little reserve calculator, all national reserve study standards based computations and disclosures. And the word got out that we had this little online tool, so we've made it available basically on an annual subscription basis for just $149 a year. So that may be a good entry point if an association wants to at least start dabbling with their numbers. And they heard that, wow, should we be putting aside 15 to 40%? And they can get a few estimates together for their maybe little association, what the roofing will cost, the asphalt, the painting, the carpets, the mailboxes. They can start putting those things in there and start getting a feel on their own, a very low cost, low price point, I guess, entry point to beginning to test what are we up against to take care of our own place.
Great. Well, I think that's an awesome entry point for many communities to get a better sense about reserves. And I think, I'll talk with you after this, but I think that I'd like to put that service under your toolbox page of our website to let owners see, board members see that that's another resource that they can have that would help make self-managing their community or, managing the community as a board with a full service manager easier.
Yeah, it's a nice little resource.
Yeah. Well, great. You've really covered a lot of ground with us today to help bring people along with why it's important, What are the fundamentals of it? Are there rules of thumb? Basic costs, how to get started. Is there anything else you want to add, Robert?
No, I just wanted to say it's a pleasure to be here today. Pleasure to assist you in helping your clients and your prospects in trying to do the right things, to be fiscally responsible with respect to their community association. It's not only an obligation, but it's people's homes. So you want to do a good job.
Yeah.
And so we want to be part of the solution.
Great. Well, Robert, you've done an awesome job explaining reserve studies today, and I want to sincerely thank you for sharing your wisdom with our audience. If they want to reach out to you to learn more, how can people find you besides the link that I'm going to put in the video below?
And that's actually the best way nowadays. We're simply reservestudy.com, reservestudy.com.
Great.
And we have offices scattered across the United States, and it would be our pleasure to come alongside an association and be part of your success team.
Great. Well, thanks, Robert, again. I'll put that reservestudy.com link in the links below. That wraps up today's Ask an Expert video. Keep an eye out for new videos on our YouTube channel and subscribe if you want to see more videos like this or see the resources page of communityfinancials.com. And thank you for watching. Thanks, Robert.
Thanks, Russell.